Well, welcome out to the Blusky Trading Lab. This is Coach Matt, guys. We're going to be working on a couple different things here today. Number one, we're going to talk a little bit about just the market today and the market this week, and kind of go back and look at today's pricing and talk about how we could have navigated the market in this setting. Where were the good entries today? Where were the stop loss placements? What could we have done from a management perspective? And I feel like these conversations, when we just kind of go back and do a little bit of back testing and discussion, can be extremely helpful in terms of really identifying the things we're doing right, the things we're doing wrong. And so that's kind of be the first conversation, is just a little bit of a look at today to discuss, okay, where were those good entries? Where was the proper stop loss placement? How we could have navigated the market here today. The second conversation I want to have here today goes to a little bit of who you are as a trader. And I want to ask you guys a question very quickly. Do you understand exactly who you are as a day trader? The time frames you trade, the position sizing, your rules, have they been dialed in 100%? Edgeless, were the edgeless there? Okay. Is having a system important? I think that's important for all of us, correct? Can we all agree with that? Having a system is very important because a system has to be repeatable. And how many of you guys feel like, and again, I'm not judging in any capacity on this question, guys, but how many of you feel like you kind of make it up every day? Like whatever the price action's doing that day, you just kind of make it up. Right? I'm doing this today based on this. I'm doing that today. Tomorrow's a different day. The day after that's going to be a different day. That's system. That's the system conversation. Now, is it okay to replicate somebody else? Absolutely. Absolutely. It's okay to replicate other people. But at the end of the day, don't you have to eventually make that your own? Don't you eventually have to perfect your system and not somebody else's? Does that make sense, everybody? And so I want to have that conversation, the beginnings of that conversation, because to truly understand who you are as a day trader, who you are as a trader in general, it's not one conversation, guys. It's not one singular moment in time. It's not 1 weeks of trading. It's not 1 month of trading. Things happen over time. And I agree with Gabber 100%. Good traders copy, great traders still. And I agree with that 1000%. And what I mean by that, if you guys see Coach Mike make a trade on a breakout of his level, would that give you confidence to make that same trade? Yes or no? If you saw Coach Mike say, oh, this is a great trade. Yeah. Okay. Now, could that one trade be really good for you? Of course it could. But can you replicate that same trade that Mike's doing without Mike there? Does that make sense, guys? And the thing what Gabber said about good traders copy, great traders still, is it's taking the technique and learning how to apply it to yourself and making it your own. Because how Mike sees things is one way, how I see things is one way, how sees things is one way, how you see things is a little bit different, because we're all a little bit different. So those are the two conversations I want to have in the lab. And then at the end of the lab, spend a little bit of time just answering your questions. You know, if you have questions on anything that you went through this week, that you had a trade that you wanted to get somebody else's eyes on and have somebody else review it, or whatever the case might be there as well. And so the first thing I want to talk about is kind of today's price action, and really kind of what's going on from a technical perspective in general. To me, the conversation this week in general has been whether or not the power move last Friday was going to stick the landing. That to me was the number one question that I personally had coming into this week. This candle right here, does this candle right here, which was that power move on the Jackson Hole candle, which came all the way up into that 6,500 level right here, Was that going to stick the landing or was that going to come right back down? Now, the difference in those two, and I've talked about this before, but when you're dealing with a power candle like we had last Friday, seeing 3, 4 days of consolidation is not a negative thing. Consolidation is pattern development. And where those patterns develop, i.e., above the 9 EMA, that's going to do nothing but put pressure on this potential breakout of 6,500. And so, my ultimate question here is can we break out of 6,500? That was the ultimate question coming into this week. That was the question coming into today. That's been the question throughout the entire week is can we get above 6,500 on the ES? Because that's where I do most of my analysis. And so can we create a momentum condition above that level? Because when I'm looking at the 6,500 level, and we'll go into the intraday side of the equation here in just one second, when I'm looking at that 6,500 level, ladies and gentlemen, that level has been tested throughout the last couple weeks, the last week and a half or so, ever since we had the pivot a couple Fridays ago. Last Friday's candle, what happened? Power move came right up into that level, consolidated, ended up going through a little bit of a pullback. But that's that level that I had the ultimate question. And ultimately, here on Wednesday, we tested above it, came right back down. On the overnight session coming into Thursday, we tested it, came right back down. On the US cash open, guess what? We cleared it, closed above it, and created a momentum condition. And so that was kind of that level that I've been anchoring against all week long. And coming into today, last week we spent the entire lab talking about levels, the different ways of creating levels, how to identify your own levels. And I came into today looking at three levels coming into today that I felt were going to be a very interesting conversation. The first level I thought was going to play a role today was this pivot right here at the 94 level on the ES. And so you got the 94 pivot right there. And then ultimately, my anchor was the 6,500 zone. 6,500 to me coming into today was kind of that number for me. It was just that significant whole number. I've anchored to it all week long. I just had that philosophy that we get above 6,500, we have the ability to make a run. But I didn't want to be very aggressive above 6,500. The reason is 6,500 was not the end all be all level. The end all be all level was actually right here at the 6,508 level, right there, where you have this test on the pivot point. So coming into today, I was looking at these three levels. These were my anchors all week long. 6,500 was kind of the level I was really anchoring against on trading decisions. 6,508 was the level that I felt we can create momentum above if we got above it. So that's what I was looking at coming into today. Now, as you can see, I'm not identifying all the levels on the chart, am I? I identified three levels that historically had played a role in stopping the market from price appreciating. And I was looking at those levels historically on the 1 hour chart because when I do my deep analysis in terms of identifying the levels I need to anchor against, the 6,500 zone was a daily level. The 6494 level was the intraday level from last Friday, and the 6508 level has been a known level for the last couple of weeks. Those levels, you're not, if you just look at this on a 5 minute chart, you don't see the power of those levels. And so when I'm looking at my levels that I anchor against, I don't really do it on a 5 minute chart. I really want to look outside that a little bit to the 1 hour time frame. I do a lot of my trending and pattern development on either the 30 minute chart or that 1 hour time frame. Now, when you go into the nitty gritty of the execution, however, you don't really do that on the 1 hour time frame. That's really about understanding your environment, understanding your trends, understanding the momentum, understanding the entirety of the technical conversation. But obviously, as traders go, we're going to live on the lower time frames. Now, when I was looking at that today, I came into the market and I don't trade a lot of the first hour of the US cash open. I live on the Pacific West Coast, so that's very early my time, quite frankly. And as a night owl, I do like trading the overnight sessions. I don't trade a lot during the first hour of the trading session, but I'm usually getting a little bit more comfortable coming in after that first opening price to a certain extent. And when I was looking at the market today, guys, once again, knowing my levels, I wasn't going to do anything above that 94 level. Here's the cash open. Here's the drop in price. Here's the bottom off that 200-day moving average. All of this is just noise to me. That's all it is. It's just noise to me. If the market would have closed above that level, I would have been ready to, from a momentum perspective, underneath my 6,500 level here. It was just noise. I didn't really have a lot of opinion. I wasn't aggressive on anything. But once this pivoted right here, I was like, okay, that level is absolutely a level I'm looking at right there. And so once this pivoted there, I knew the 6,500 zone was going to play a role here today. And so at that point, I dropped it down into the 5 minute time frame because that's my execution time frame. And I said, okay, if we close, because once again, to me, once you have your level established, once you have your identity of what you want to do, it becomes a question of can you achieve that? Can you get a confirmation close above that level? And that's only an individual trader. Like you, as the individual trader, you're the one that's going to have to make that determination. And for me, because there was a level right on top of the 6,500 level that I was concerned with, if for example this level right here at 6508 was 6520 and I had 20 points to run with here, I might be a little bit more aggressive there. But because I didn't have a lot of room here, I honestly wanted to see it close above. And I also wanted to see that close because last time we saw the close and it came right back down under. And so you didn't have to go far to look at this 6,500 zone right here and say, "Ooh, just last time it hit that number, came right back down." And so to me, I was like, "Okay, close above that level and get the candle above the previous candle high." That's the technique that you do when you're looking ultimately at a confirmation conversation. And so this candle right here closes above the level. And then what that means is if you ask for confirmation, meaning you have to see a close above your level, that's what confirmation is. It is the insurance that your identification of that level, that pattern, that support level, that resistance level, whatever you're looking at, it's the confirmation that what you are assessing is accurate. It's the truth of the technical conversation. And so it gets confirmation here. See the follow through here. You don't need to see the second candle, guys. You just need to see the first candle close above the level, and then that entry goes right in above the candle high. And so the first entry I felt was a really good entry here today was a couple hours after the market had kind of simmered down a little bit. The volatility of the cash open had settled down a little bit, and you got that confirmation close here with the trigger above the high of that candle. Now, that was the first signal that I saw. Do you guys see what I'm talking about on that first tradable signal here and the rationality behind it? Okay. Now, the second question is where would you put a stop loss here? I want everybody to think about this. Pull up your chart, 5 minute time frame. It's the 9:05 candle, which is the 12:05 on the East Coast as we're going into the lunchtime. Okay. So, where would you place a stop loss based on this situation? We're trading a breakout. Where would that stop loss go for you? I want to see your numbers. This is a situation where I want you to take a little bit of time here. I want you to identify exactly where you personally would place a stop loss on the ES so that we can have a conversation with it. This candle right here. Let me get a little bit of a bigger thing there, and let's go. This candle right here. 2 times ATR? On what time frame though, Ace? Your execution time frame? So that would be the 5 minute ATR. Yeah. Yeah, if you're going to use an ATR, you want to use it on your execution time frame. Because if you use it on like your pattern development time frame or your trending time frame, those are going to be extensive, right? And you'll take too much risk. So if you're going to use an ATR, always use the ATR specifically to whatever your entry time frame is. And so if your execution time frame, and again, just from a time frame perspective, remember there's always three time frames we look at. We look at the longer term horizon, whatever that time frame is for you, so that you can understand kind of the totality of the technical conversation. You then have a mid-tier time frame. For me, that's usually the 30-minute chart or the 1 hour time frame to really kind of look at trends, pattern development, key levels, and then you look at the execution time frame, and the execution time frame is obviously shorter than that. And to me, it's either going to be 5 or 15 minute for me. And so whenever whatever you're doing the execution on your entry, if you're going to use an ATR, you always want to make sure the ATR is consistent with your execution. All right, so we got Cindy and Cindy under the 9 EMA on the 5 on your execution or the 15. Because if you go underneath the 5, right, you're basically playing the bar, and there's nothing wrong with that, Cindy. I got no issue with that. You could also come out to the 15, right? And the ultimate question is on that candle here, can you get a stop loss underneath that 15 EMA and still make it successful? I would say yes. And that's because you had good development going into it, by the way. I like that technique. When you're going into a breakout situation, you are expecting what? On any breakout of any level that you ever trade, what are you expecting? Not a pullback, not on a breakout. You do not want to see a pullback on a breakout. You want to see momentum, right? You want to see momentum. But you don't want to get kicked out just simply because of volatility. You know what I mean? Because sometimes those breakouts, they get fought for, right? They get fought for. Bears are going to fight for that. Bulls are going to fight for that. And so you don't want to be too tight because if you're too tight, you can just get ticked out and come right back up, right? And so you want to give it a little bit of room. My stop loss on this one was right underneath the candle on right around 96. So my stop loss was at 96. And so Gabber, ding ding, you and me right on the same time frame there. Good job, Gabber. More bucks, 84. 84 get you all the way down here. And if you're looking at 84, 84 is not a bad number. Like, I'm not going to sit here and say, okay, a stop loss at 94 is great, a stop loss at 96 is fantastic, but a stop loss at 84 is terrible. It's not. But you also have to understand if you're going to take like 20 points of risk, at a minimum, what do you have to achieve to offset that? You better be expecting at least 20 points to your, not your ultimate target, Nacho, to your first target. Because in any tradable situation, every trader is not going to have one target, guys. Traders going to have multiple targets. They got target number one, they got target number two typically. Target number one is a management conversation. Target number two is like your ultimate end all be all target. You achieve this today, you're good, you're great. We throw out those numbers all the time. To target one, I want everybody to write this down. The R to R, meaning reward to risk ratio, has to be 1 to 1. So if you're going to assess a 20 points of risk, which is perfectly fine on a lower position, I would agree with that. I forget who said that. Gabber, you said that. I would agree with that 100%. On a lower position trade, that's perfectly fine. But you also better be assessing higher return. Does that make sense, guys? And to me, when I was looking at this breakout, I couldn't assess 20 points. And so because that 608 level was kind of that target number one. And so I had to get that 1-to-1 at target number one, which means I had to use a tighter stop loss because I was targeting 608 as target number one. My secondary target was a little bit different. I'll talk about that here in a second. But does it make sense when we're looking at the 5-minute chart here, guys, kind of coming into the execution again? Does it make sense that this candle was the candle that you were waiting on to close above the 6,500 zone? And once this candle closes above the 6,500 zone, that entry is above the high. Do we all kind of understand the entry technique against that level you're anchoring to? Is everybody good on that? Now, on the stop loss to me has a little bit more subjectivity to it. I don't think the entry has subjectivity, guys. I really don't. If you are anchoring against 6,500 and you're an aggressive trader, that order is to get filled above 6,500. Like you're not even waiting for confirmation there. You are saying if it gets above 6,500, you are making that trade. Once again, I didn't say that because the last time we got above 6,500 today, it came right back down. I said I need to see a close. The very second you say you need to see a close, you know exactly the drill. Close above 6,500, trigger in above the high of that candle. That's the confirmation. That's the entry technique. Once again, two types of confirmation, simple versus standard. Simple confirmation is the entry simply has to achieve a number. That is for the ultra aggressive type of a trader. And let me ask you guys a question. Who here would define themselves as an aggressive day trader? Like you want to maximize your entry, you want to maximize everything. Okay. Okay. To a fall. We're day traders. We're all a little bit more aggressive than other types of traders. Can we all agree with that, by the way? As day traders, we're kind of the most aggressive time frame out there. All right. Now, who here is maybe a little bit more conservative? Like it's not a matter of maximizing reward to risk ratio, but it's a matter of maximizing probability. You want to hit a higher percentage of your trades. You don't want to take on a lot of risk. You want to make sure you're going to make less trades, but hit a higher percentage of those trades. Who's that? And I want to say timid. Now, Prima, you might be timid, but I don't think conservative traders are timid. I think conservative traders are very systematic more than anything. Okay. If you are the conservative trader, the only difference between a conservative trader and an aggressive trader is really not on stop loss technique, guys. It's stop loss techniques very similar for all types of traders. Targeting can be a little bit different and unique to you as the individual. But when it goes to the concept of confirmation, this is an important conversation, guys. If you're the aggressive trader, you don't need to see standardized confirmation. What standard confirmation is if the candle on your execution time frame, if it closes above your level. Once it closes, you have standard confirmation. Standard confirmation is the candle has to close above the level to equate to confirmation. Simple confirmation. Everybody write this word down. Simple confirmation. Everybody write that down right now. Everybody write it down. Simple confirmation. Simple confirmation is when the candle simply achieves the number, but you don't have to have it close. Now, I'm more of the conservative type. I do like to see confirmation. Confirmation is the insurance you're right on the projection, according to Jesse Livermore. I like to see confirmation for the most part, but that doesn't mean there aren't certain environments that I'm willing to be a little bit more aggressive above. If the environment is clean, meaning the breakout channels clean, I'm willing to be more aggressive. For example, if there was not the wick up here, but everything was kind of right here at 6,500, like wick, body, and there was nothing above this right here, I would have been a little bit more aggressive on the entry. But because the entry, my level was a little bit dirty, I want to see that dirty level get cleaned up with confirmation. Does that make sense, everybody? Yeah. So if the level's clean, and I think we all know what clean means, right? If the level's clean, meaning it doesn't have random wicks on top of the level, doesn't have one or two candles that are like throwing off the analysis, I think you can be very aggressive there. I do. But if the level's dirty, the only thing that's going to clean up the level is confirmation. And so I kind of want to let the level do the talking. I certainly want to understand who I am, and I am more on the conservative side when it comes to execution. But at the end of the day, I want to let the environment tell me how aggressive I need to be. I want to be able to read the environment. And when you're looking at this 65 level here, it was just dirty. You got a random wick above it. Think about all those traders that traded this 6,500 breakout on this candle that were really upset on the fake out. They're going to want to they don't want to get faked out twice, right? Fool me once, that's on me. Fool me twice, fool me once, that's on you. Fool me twice, that's on me type thing. Well, fool me once, okay. I need it to be proven, right? And so again, cleanliness of a level goes to the how many ticks are right at that level, how many bodies are right at that level. Do you get wicks above it, bodies above it, or is it very, very, very clean? For example, when I come out to the daily chart, would you describe on the daily chart the 6,500 level as clean or dirty on the daily chart? It's smooth as butter. Okay. So as a swing trader who anchors the number one time frame is the daily chart, do you think I was more aggressive as a swing trader as the market was going above 6,500 today? Yes. I didn't need to see the close, did I? Because the cleanliness of the level. Does that make sense, guys? But when you come into the intraday side, you're looking at that exact same level. Is it clean? No, because you got bodies and evidence and wicks above that level. And so it's just a matter of their time frame. But I just want to explain the concept that if the level's dirty, confirmation key. If the level's clean, you have a little bit more leeway in how aggressive you want to be. Is everybody just kind of understanding that environment more than anything? Is everybody good on that conversation? Okay, good. Now, targeting on something like this, when we're dealing with breakouts where I feel like we have a multiple time frame situation, I don't have a technical target above 6508, guys. Okay. Now, can anybody tell me why I personally did not have a technical target above 6500 today? Like 6508 was the kind of the top level, and then above that I didn't have one. That's a little bit of it there, RQ. It's not just the all-time highs because there's times you don't have a technical target in open airs. There's a lot of different ways to assess to open air. But when you are breaking into all-time highs, okay, and there's nothing above that level, I want to let momentum play out. I'm a big believer in allowing momentum to play out. I don't want to get kicked out just simply through any degree of short-term consolidation. I don't want to get kicked out in a two candle pullback. I want to let the momentum play out. And so when I'm in that environment where I want to allow the momentum to play out, I shift to the 15-minute time frame and I use the 9 EMA as the anchor. And as long as you stay above that 9 EMA, I'm involved. As long as you stay above that 9 EMA, I am good to go. I don't want to choke off the price appreciation in an environment where you have price discovery. Does that make sense, everybody? Like, I don't know. if the market's going to scream to 6,600 or if it's going to come right back down. But there's nothing to stop it from getting into 6,600. Now, is 6,600 my target here? I don't know. No, I don't know. Right? But as long as it stays above the 15-minute 9 EMA, I want some part of that action. Is everybody understanding that? Yes, Aaron. See, that's my point. If you're trading in ranges and there's like a technical target there, absolutely you're going to trade that technical target. But if you're in an open environment, I feel like if you manage the trade more from a stop loss management perspective, you actually capture more of the ultimate trend than if you're micromanaging the stock. For example, let me ask you guys a simple question. How many of you have ever worked for a manager, a director, a vice president, a CEO? I don't care. How many of you have ever worked for a manager that micromanages the employees? Okay. Okay. Now, second question. Are you more efficient or less efficient? You're less. Every study says you're less. Okay. And what I've always told other managers, because I've done a little bit of this, what I've always told the managers is you guys are bad managers. If you feel you have to micromanage, it's your fault. You're the problem. The manager's the problem, not the employees. You don't have system, you don't have technique, and you haven't trained your people on the system. That's the problem, or you just have bad employees and you need to fire them and get better ones. But there's a flaw, there's a problem that goes there. Well, guys, how many of you feel like you're the manager who's micromanaging your day trades? Now think about that for a second, guys. Every single one of you just said micromanagers suck. And yet, how do you find yourself doing on a day in, day out basis? Is it any different? Is the mindset any different when we're looking at processing a trade in the market versus a manager who does this with their employees? Or is micromanaging because you have some emotional context that's missing? No, Tiffany, of course not. Of course not. I have found myself micromanaging every now and then as well. I think it's inherently in all of us, right? No, I know. I just like having those honest conversations. You know what I mean? But I would never, ever suggest that people who come to this lab, people at Blue Sky who are trying to do better for their lives, who are spending their time trying to get better, suck. Absolutely not. In fact, I would personally put you in the top echelon of people who are doing great things in their life and who are going to do amazing things over the next 5 to 10 years. And you're doing everything you need to do to become perfect at your skill set. I find you guys to be the exact reason why we do what we do. You're amazing, and all we do is work on our skill set. You know what I mean? But we have to have honest conversations if we're going to improve on that skill set. Would you guys all agree with that, by the way? And if you think I can be harsh, oh man, you should have saw some of the things my mentor told me. My mentor one time told me, okay, one time, Matt, you are the dumbest smart guy I've ever known. And I looked at him and I said, thank you for the compliment. That was my response. So believe me, we all have to learn, guys. Okay. Now let's come back into the 15-minute time frame here. Okay. Now the second entry, because I'm a pattern guy, guys. And once the trade's in process, if I'm managing on a 15-minute chart, should I live on a 15-minute chart or should I live on the 5-minute chart that I was executing? Once the trade's processed, I got my stop loss in, I got my entry in. I'm on the 15. My management's on the 15. I'm doing everything I can on the 15. Now, the second technique here, the second entry that I felt was a really good entry today, was this candle right here. Now, as you can see, we got that first move right here that established a higher threshold of resistance. Now, in that first move, we got a little bit overextended and we started pulling back. And where did we pull back to? Right on the 9 EMA. Now, one technique that I love looking at when you're dealing with a pullback, inside candle, upward movement in price. Do you see how this candle right here on that support level? Do you see how this candle is inside this candle right here? Can you guys see this candle inside that candle? That is a momentum shift candle. What that candle is, it's known as a hammer candle. Do you see how it looks like a little bit of a hammer? And the hammer is inside the previous candle. What that signifies is that's a reversal candle, is what it is. Can anybody tell me the name of the candle pattern? Not the single one, that's a hammer. But can anybody tell me? No, the clean hammer is like up here. Like it's not clean, but it is a hammer. But can anybody tell me the name of the and the most important question in here, Ace, is the inside the other one. Can anybody tell me that inside the previous candle? You could say a little bit of evening star happens a little higher. Primo, well done, well done. It's a harami. Well done, Primo. Everybody tell Primo great job. Primo, that was great job. I want pay Primo some love here. Everybody pay Primo some love. That's fantastic. Absolutely fantastic. It's called a bullish harami. Now, what a bullish harami is, it's when you basically have a bearish candle, and I'll draw one for you very quickly. We'll do a little bit of crayon hour here. So you have your bearish candle right there, right? And any candle that is the green variety inside candle, an inside candle is known as a harami. Now, a harami is a bearish slowing momentum candle. What that signifies is the momentum is shifting in the short term, and you're shifting right at that key level of support, which means, once again, let's have that confirmation conversation. You got your inside candle, momentum has shifted. That's a pivot candle, mind you. And then you get your upward movement in price, which is the confirmation. I did not know that, Ace. I did not know harami was the Arabic word for thief, but they did just steal the bear's heart. So, I mean, that makes some sense to me there, Ace. But once again, it's the same conversation we have. Okay, I had some other comments there too, buddy. It's the same conversation we have on the confirmation on a breakout that we saw at the 6,500 level, guys. Ultimate question: do you need to see it close above your pivot candle? And yes, the Japanese word for it is it's a pregnant candle. It the so I was a little that kind of took me back. I didn't know the Arabic word for it. I was like, oh, thief, pregnant. There's got to be some commonality there somewhere, right? But you have the exact same conversation here, guys. Does it need to confirm or not? Anytime you get your signal candle, which is either a breakout confirmation candle or a pivot candle at support, you just go back to that same conversation. Do I need it just to get above the high? Do I need it to see it close above the high? And if you need to see it close above the high, you wait on the candle to close and then you get your entry above that high. If you don't need to see the candle close, meaning simple confirmation, you just get it above the pivot candle high here. But that's the second setup that I saw that was really, really, really good. And so once the trend has been intact, now you have kind of everything you need to know to understand targeting and whatnot. Because now that you have your first move went from 69, right around the 90 level to the base here around the 10 level, there's a 20-point range there. And then you have a base here right around the 03 level. And then you kind of pivot right here around the 20 level. That's a 17-point move. Markets have muscle memory, guys. Once that first range is established, the second range can be fairly equal. And obviously, in Elliott wave theory, it can expand as well. And so the first entry we really liked here today was that confirmation close on the 5 minute chart with a breakout on the 15 minute stop loss management. The second level that I think you could have traded here was the snapback bull flag based pattern to the 9 EMA on the 15 minute chart. Now, the third one has not established itself yet. Where's the third one going to be? Where's the third level right now that we're going to discuss going into the overnight session? Where's that next level that the traders are ultimately going to be talking about tonight? It's 65.20. It's this level right here, 65.20. So once again, 65.20. If, well, the ultimate question is the environment clean or is it dirty? Let's first have that debate. Is the 65.20 level, is it clean or is it dirty? It's pretty clean. It's pretty clean. Now, should we define clean? We should define clean, right? To me, if there's only one wick above the level that you're anchoring to, that's fairly clean. If there's two wicks, two bodies, two anything above the level, it's dirty. And the reason I say that, guys, is one wick can just be one singular moment in time. Two things, that's confirmation. And so ultimately, I'd rather not have that wick there, right? Ultimately, I'd rather have, that wick not establish itself and be very clean above 55.20. With the one wick, I think it's a little bit of a debate, but I would still say it's relatively clean. There is a John Wick joke in there. If there's one John Wick, I like your ability to survive. If there's two John Wicks, you're dead. Yep. So, okay, one or less wicks above the level, clean or dirty. If there's one wick above if there's no wicks, we would obviously say it's clean. If there's one wick, clean or dirty, it's still clean. Okay, it's still clean. If there's two wicks, what? It's dirty. Okay. Now, clean versus dirty, what does it help me make a decision on? Clean versus dirty. If I need to see confirmation or not. Do I put my entry above the level or do I wait on confirmation? Gabber, well done. Everybody tell Gabber, great job. Everybody show Gabber some love. Nailed the answer. Well done, Gabber. That was fantastic. Okay. By the way, I am a strong believer in positive reinforcement to one's tribe. Everybody else out there, that's on them. Blue Sky Tribe, that's on us. We're a community, we're a team. We navigate the markets together. How many of you agree with me, by the way? Um, it's not you can always say I wait for confirmation, RQ. Okay? You can always say that. At no point will I or anybody else say you did bad by waiting on confirmation. Like at any point you say I need confirmation, like a standardized confirmation close, like that's not a bad thing. Like it's not. In any environment whatsoever, a standard confirmation is perfectly fine. But if the level's clean, I find myself being much more aggressive. I find myself being more aggressive on the entry. I find myself feeling more confident on that. Like you go over to gold, okay? There's like right here, that's pretty clean. Like three wicks all dialed in right there. That's pretty clean. I think you could be aggressive. Now you come out to a little bit more time frame and we're clean until where? Until about 3,500. Now, if I was looking at the 3,500 breakout, is the 3,500 breakout right here? Is that clean? No, it's dirty. Okay. We got wick, wick, body, wick, wick. right? That's that dirty. So if I was trading this breakout right here, could I be a little bit more aggressive on the entry above 79 than if we were trading the 3500 breakout? The 3500 breakout, we would probably say we want to see a confirmation close above 3500 before we had the confidence to see further price appreciation. Because even in this breakout over here, you have your confirmation close. Remember, that entry goes in above the high. That thing never sniffed it, came right back down. And so the confirmation close basically ensures that you're gonna ensure getting in with some degree of momentum. But there's always a price somewhere, and the price you're paying is a little bit of a higher price because again, like a clean breakout can get momentum very quickly, and that candle can close 10 points above the breakout channel. And then all of a sudden you say, oh, I missed it, right? So there's always a drawback, right? The drawback on if you need to see confirmation is you're going to get a worse number, but you're going to get a higher probability. But again, to me, clean versus dirty is an important conversation because it goes to your confidence and how aggressive you're going to be on entry. And I think the gold setup is honestly a very, very good one, RQ, in the sense that this is clean, this is dirty. And because you only have 20 points here, if you were looking to make a gold trade today, would you be more aggressive or more conservative? You have 20 points to play with, you have a clean environment, and it's clean to 3,500. Would you be more aggressive or more conservative based on the gold analysis? I would be more aggressive. You only got 20 points to play with. It's a clean environment and it gets dirty at 3,500. Like, I kind of feel like the market's going to stop at 3,500 and then we're going to have a different conversation. Um, yeah. Well, you're looking at the hourly chart here on that. If you come into like the 15-minute time frame, like because of the consolidation, I personally my stop loss would be underneath this wick right here, kind of the base of the consolidation. See these wicks over here? Like wick, 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 wick. That's where my stop loss would be on that. So the breakout would be clean at 79. Stop loss underneath the base here. Yeah, like because you've had a couple hours of consolidation, like the 9 EMAs flatlined here. Now you go out to a little bit of a longer time frame. Obviously, the 9 EMA is still working, working on other time frames. But no, because of the environment's clean and it's a base, you trade the base, right? Entry above the base, stop underneath the base, and as that momentum takes hold, then it ultimately does become a 9 EMA rider, meaning stop loss rides the 9 EMA. Awesome. Awesome. That's a fantastic question, by the way. Is this conversation helping today, guys? You enjoying the conversation? I love when we just pull up charts and talk about these things. Like I feel like it, especially after, the last, 4 weeks in this lab, we spent a lot on just kind of education and working on technique and whatnot. The next couple of weeks, we're going to spend just kind of doing stuff like this, right? Just kind of explaining what we're seeing, beautiful entries, stuff like that. Well, Primo, don't test me there, buddy. Little 15-minute summary at the end of the day. Oh, I might be able to get talked into it. I might. I'll tell you what. I'll tell you what. If we get 50 people in this Thursday lab, I will agree to start doing some daily recaps after the live stream. But I want 50 in this lab. I think that's a good goal. Can we all make that a goal? Does that sound good? And don't blame me. Blame RQ. He's the one who put the 50 people out there. I would have said like 25, but RQ said 50. So we're going to use 50. Get the word out. Get the word out. Because I don't think it would take us long just to recap every day and have that conversation. You know what I mean? And I think it could be extremely helpful. That's right. That's right. All righty. Okay. So everybody's got one homework assignment. Tell one person about Blue Sky and this lab. And when we're in the streams, tell people to come to the lab And as we build this lab out, we'll start adding more sessions. How's that? I think that's fair. I think that's fair. Is that fair, everybody? Awesome. Awesome. Okay. The last thing I want to talk about here today, and we'll do this fairly quickly, is I want you guys to start thinking systematically, right? I want you to start working on personalizing your systems over time. And I do mean over time. Your trading plan. Who here has a trading plan, like a business plan, and who does not have a business plan, i.e., a trading plan? Okay, Nacho. Okay, more bucks. Tiffany. All right. Is it important to treat trading like a business? Yes, 100%, guys. You have to have that pro mindset. 100%. And as such, if you were going to start a new business, okay. Oh, thank you, Gabber. Please, everybody, polls. I love polls. We're going to do more of those. Thank you, Gabber. Gabber is now the official pollster at Blue Sky. Go ahead and vote in the poll, please. If you were to develop a business plan and you had a great business idea and you went into, you guys know what seed capital is? Like you went into a entrepreneur and you're like, hey, I got this wonderful business idea and we're going to make a lot of money. And it's going to be a lot of fun. And they say, what's your business plan? And you say, well, we're going to wing it every day. Do you think that individual would invest in your business? Okay. I want you to think about that from a trader's perspective now. When you think about that from a trading perspective, we all just said we wanted to treat it like a business. So if we're going to go in and we're going to go into Coach Matt and say, "Hey Matt, will you fund my business?" And what will my first question be? What's your trading plan? Your trading plan is your business plan, guys. It's your daily routine, it's the levels you trade, it's the time frames you trade, it's the techniques you trade, it's your stop loss management, it's your position size rules, it's your targeting methodology, it's the asset classes you trade, it's what you do at the end result of all the money you make, what you do with that money. It's a complete plan, right? And like Nacho, who feels like sometimes they run a nonprofit business. Yeah, I would say Nacho. That's hilarious, by the way. I would say as a new trader, I felt that way as well. Now, guys, don't think that this is a negative for you. Okay. It's just to understand that these are the things we need to build over time. We don't have to fix every single thing in a day. We don't have to design your entire trading plan in a single week. It takes time to build that well-oiled machine, guys. Okay. And so we'll work on those things over time. Ace, my issue is always size and adding to winners. The timing has to be precise. Yeah, that's I would agree with that, Ace. I think the number one mistake people make in trading is they put too much money into each trade. I honestly believe that's the case. I think like people will open up an account for $2,000 and take $1,000 an option trade and think they're traders. They're not. They're gamblers, and that's period end of sentence. If you're putting half your account in an option trade, you might as well take that same type of money and go put it down on black. You'll have about the exact same probability with roulette, and you might have a couple free drinks and a couple stories to tell if you do it with roulette. You're not going to have that as a trader, and so position size is the end all be all of everything. Truly, everything. How many of you have ever heard of the risk of ruin? Who? Oh, I'll write it down because sometimes my drawl can get the best of me. Risk of ruin. Who here has ever heard of that? Risk of ruin. It's a trader's concept. It's also in professional gambling. Risk of ruin. Just yeah, yay or nay. Let me know. The risk of ruin basically states this. If you risk over 4% of your portfolio, okay? If you risk over 4% of your portfolio, meaning the capital, the totality of capital you have to trade with, you are taking undue risk to your portfolio. For example, if how many of you have ever had 7 losses in a row? Who here has ever had 7 losses in a row? I have. I've had 7 losses in a row. You haven't had 7 losses in a row. You haven't been trying to pick up a bottom in a retracement. Yeah, yeah, yeah. So if I was an option trader or a futures trader and I was put risking seven and I was risking 10% of my account in one trade and I lost 7 trades in a row, which I guarantee will happen over the course of your career, guys, you're done. You're out. You will never be a trader long term if you risk that much money per trade. That's what the probability of the risk of ruin states, which every trader anchors to. So if you have $2,000 in your account and you risk $1,000 in your first option trade, now you might put $1,000 in your option trade and say, I'm not risking $1,000. If you're in a leverage trade, you're risking that capital. Period. End of sentence. Deal with the gap situation on an option trade. You'll deal with it really, really quickly. And so think about it like this, though. If my max risk is 1% of my portfolio, how many trades in a row do I have to lose before I'm done trading? More than is mathematically possible. Does that make sense, everybody? So, position sizing, which I think a lot of us struggle with initially on, position sizing is absolutely vital. You should never put more than 4% of risk to your totality of your portfolio in any one trade. Now, position size can be a little bit higher than that, but your ultimate risk can never be above 4% of portfolio. And for most day traders, guys, it's much less than that. Okay. For most day traders, it's much, much less than that. Now, I think as you start building your own risk rules and position size rules, I think it's good enough at first to simply just say, kind of like I believe who was it? Tipped, you said this. I have 175 daily loss. Okay. That's my daily loss limit is 175. And if you're comfortable with the 175 loss, I think that is perfectly fine. Like I think it's perfectly fine to say I'm willing to lose X amount in a trade. If you're consciously okay with losing that $175. And so whatever it is, guys, obviously I would like you to get to the point where you're doing this against portfolio, but whatever it is, you have to have a level that you're comfortable losing from a risk perspective. And what the risk of ruin states is anything that you any risk you have that is 4% or greater against portfolio, you're taking undue risk to the portfolio. Now, at first, it might feel a little bit more because you're building, right? But ultimately, that's where you want to get to. Now, when you're thinking about it is, I agree with that, Tiffany. I do agree with that. That's why I said at first it's a little bit tougher, but that's where you want to kind of work towards. But I will say this. You should never trade in your eval vastly different than what you're going to trade in real life. Like you should not treat that eval too radically different than what you do in real life because the end all is not just to pass the eval. The end all is to be a successful trader long term. Can we all agree with that? Like that's the ultimate goal is to be a successful trader long term, not just short term. And so you don't want to be too aggressively different in an eval than you would in any other environment, or all you're going to do is create really bad habits when you're live trading. And as a coach who's had to recreate a few different Frankensteins along the way, ladies and gentlemen, I'm here to say that I would rather have you treat it sincere initially than have to try to fix that situation over time. Tiffany, if you haven't blown up an account, you haven't traded long enough. It's part of that's part of the rite of passage there. Okay. Now there's a couple things I want you guys to think about as you are, kind of thinking about developing your own trading plan. And I want this is your homework assignment between now and next Thursday. I want you to start detailing some of this. I want you to start detailing some of these six things. Number one, you have to have an edge in your system, meaning what is your technical system? When do you make a trade? Why do you make a trade? I am a pattern trader. I love pattern development at certain levels, and I trade breakouts and retracements. I do it on my effective time frames are the management time frame is usually the 15-minute chart, especially in a breakout. The execution time frame for me is the 5-minute chart. Trending analysis is usually done on an hourly chart. But at the end of the day, I'm a pattern trader. That's what I love. I love patterns, and if I don't get patterns, I don't make trades. Period. End of sentence. I anchor on patterns. I anchor on levels. I need to see those things. If I don't see those things, I do not make a trade. Period. End of sentence. Nothing else matters. If everybody else makes money, but I don't make any money, I'm perfectly fine with that because I know the patterns I want to trade. In fact, when we're in the stream quite a bit, I'll be like, yeah, that's a good trade. It's a good scalp trade. I'm not going to make the trade because I need to see something else. I'm not a momentum trader. I am a pattern trader. I love my patterns at my levels. That's what I love. There's my edge, right? And so and that takes a little bit of time, but I want you to start thinking about it like that. I also want you to think about it like this. Any system that you trade should be easily taught to somebody else. If it is not easily taught to somebody else, you do not have a system yet. Can we all agree with that? If you cannot teach your child your system, you don't have a system. You have overcomplicated the process to make it make sense to you from a psychological perspective. Trading should not be overtly complicated. It doesn't mean, price can't be complicated sometimes. It doesn't mean trading can't be complicated. Of course it can be. I'm saying your system should be simple. Does that make sense, everybody? Tiffany, I would say if multiple time frames, keep your eye on the prize longer, like again, work on those different time frames, but I'll get into that here in a little bit. And Tiffany, hopefully, one of the things that we do these conversations week in and week out is that you start having those light bulb moments, right? Has anybody had a light bulb moment in this lab today where it's like, oh yeah, now that makes sense, and something else started making sense? Like these conversations will happen over time. Oh, Ace, now you're talking my language. Absolutely. Absolutely. I love top down. SPY sectors, individual securities. Absolutely. Number three, it's got to be repeatable. Your system can't work on one day and not work on the next. It's got to be repeatable. Got to be repeatable. You can't wake up every single day and have a completely unique experience as a trader. It's got to be to the point of it gets boring, guys. Honestly, if you're getting way excited as a trader, you're number one, you're making probably too many trades. You're over position sizing and you're over trading. If you feel like trading is like on a drug, you're doing it wrong. Truly, truly. Trading should be like fun, exciting, no doubt about that. But it should also be like a paint drying on a wall. It should not be too exciting over time. Stay bored. Stay bored, my friends. I always say that. Don't get me wrong. I love momentum as the next guy, but consistency is the key. Number four, it's got to have survival. You can't get hit on any one day, 1 week, 1 month, 1 year and be out. Like you cannot, guys. You got to have survivability and you got to be able to survive any market condition, meaning going back to the position size, which is management, which is number five. The only way to be survival is to position size low and have appropriate risk management. I put this much money in the trade. I'm willing to risk this much. I either like I don't mind what Tip said earlier, either from a dollar figure perspective, especially early on. Like I have no problem with that at all. I'm willing to risk 175, or I'm willing to risk $100. I'm willing to risk $50. I'm willing to risk $250. Like just whatever that level is, be comfortable with it. Or two, where I want you to get to the point, and it might take a little bit of time to do that, but it's really a position size against portfolio is really kind of that management. And then you guys finding, and I think this is an important one about you, understanding who you are, understanding your life routine, understanding your life responsibilities, understanding the time frames of the day that you can trade, understanding your asset classes you can trade, understanding if you're an aggressive trader, if you're a conservative trader. Do you know how many times I've ever met somebody, usually, a male, but it does happen on the other side too, where I ask them the first question and I say, "Okay, are you aggressive or are you conservative?" And what do all the men tell me all the time when I ask them that? Oh, I'm aggressive. No, most of them. I'm not talking about people who actually have experience trading RQ, because most people who have experience trading, it teaches them valuable lessons. That's one of them. But I'm talking about fresh off the boat, right? Never traded before, just want to trade. Um, Usually, here's another question I got for you. Percentage wise, are men or women better traders? Percentage wise, it's women. It's not really close either, to be honest with you. Like women are awesome traders. Like awesome. Awesome, awesome, awesome. I'm not going to get into the debate of why at that point today. Like not just the sooner you as a man can accept that women are superior in most things, the better your life will be. That's all I'm going to say. And you can take that or not, but that's where my head's at on it. Of course, then I've been married for 20 years. So I've been trained. Okay. Anyways, these are the things I want you guys to start working on. Okay. Now, last question. We went a little bit overtime here. Did you guys have fun today? That is true, Tiffany. That is true. Girls do rule and boys do drool. All right. So, homework assignment between now and next week. Number one, okay. Number one, tell somebody about it because we want to start expanding. So, tell somebody about it. Let's make this a go to every single week. And number two, start detailing your system because once you got things down on paper, we can start modifying to perfect. And so start doing that for yourself. And over time, we'll start dialing those things in. Now, with that said, guys, I hope you have a wonderful, wonderful rest of your day. I hope you have a fantastic next 24 hours. And if you absolutely need anything from me, hit me up in a private message in Discord. Outside of that, guys, have a great day. Later, team. Well, I appreciate you guys. You're the best. You guys make this lab fun. And Wiggle, you have an additional homework assignment. I want you to research prospect theory.